Hello friends, it's John Lone King and welcome to my next episode of From Profits to Properties, where I help you to grow your business, to make profits you never imagined, and then give you tactics to turn those profits into long-term wealth through real estate, through helping you to buy your primary home, a luxury home, or investment properties. So today I want to talk about having direct conversations. I want to talk about, in my first segment, the business side of it, how important it is to have a conversation, and sometimes how important it is to have a conversation that is risking the relationship. And then the second half, I'm going to talk to you about 1031 exchanges and some ideas about buying investment properties outside of your market. And that kind of ties to the first half because it has to do with me risking a relationship with somebody that's important to me in order to help them to not go down a path that really was going to lead to disaster. So let's get started. So first and foremost, being direct with somebody, it's very, very hard. It's very, very hard for a human to accept and take on purposeful confrontation. Yet most good things lie on the other side of confrontation. Most good things lie on the other side of fear, but it's critical that you are willing to accept the fact that you have to confront people in business. When you own a business, when you run a business, even if it's a business of me and you are the only employee and the only person in the business, you have to be willing to confront your vendors, your contractors, your suppliers. You have to be willing to confront your clients sometimes and be able to have a very direct conversation. Now, in my business and my company and my coaching, we introduced this idea a long time ago about pineapple conversations. And it's about having a conversation that really is a pineapple conversation. Now, if you think about a pineapple, it's prickly and hard on the outside, but once you cut it open, it's juicy and tasty on the inside, and all good things are on the inside, but we have to get through the prickly outside first. And that's a good way to think about having these conversations with someone, is to think about, hey, I want to help get you to a better place. I want to get you to where you can eat this great pineapple, but we got to first get through the outer shell, the hard part, this prickly part of the outside of that pineapple. So we actually started calling them pineapple conversations. We actually got to the point, I don't have one with me right now, but we got to the point where we actually bought pineapples for everybody at the company, little spongy pineapples that you could literally use as a reminder to have pineapple conversations. And sometimes we literally would use that as a metaphor, and you'd set up a meeting with somebody and you pull out the pineapple and set it on the table and say, look, I need to have a pineapple conversation with you. I want you to understand what we're about to talk about may not feel good, but it's important because it's going to help you get to the other side and be in a better place. Now, this is whether you're talking about someone who works for you or maybe it's a client. I'm going to share with you a situation where I have someone that actually I have a personal relationship with, who was making a decision with a property that they were selling and wanting to buy something else that I felt very strongly was not the right move for them. Yet I didn't have a very direct conversation with them. I wasn't very clear. I brought up my concerns and I said, hey, have you asked about this? And they said, well, yeah, I did. And here's the answer I got. And I thought, okay, well, at least they asked about it. And then a couple of days later, I said, hey, have you asked about that? And they said, well, yeah, I mean, I don't think that matters to me, or that doesn't apply to my situation. I thought, okay, well, that's fine. I accept, and I kind of backed down. And last week, I got to the point where I was talking with some other professionals that I trust. And I said, hey, I got to ask you a question. I have this person that's very important to me, and they're making this decision to sell this property and move it into this particular type of investment vehicle. And I have concerns about that. What are your thoughts? Talked to three very, very close, very long-standing professionals that I've been working with for a decade or more. All three of them said, John, that's not a good fit for that person. Like, that's not the right thing for them. And I realized that I hadn't been direct. And I for years have said to my clients, you know what? If I think this is a good deal for you, I'm going to stand on my desk and scream at you until you see what I see. Once you've heard me, it's your choice whether you want to do it or not. But until I feel like you've heard me, I'm not going to stop. But I also will be the first one to tell you it's a bad idea for us to transact. It's a bad idea for you to refinance. It's a bad idea for you to purchase this property because it's not going to accomplish your goals. And that's something I've lived by, is giving that level of advice to people. And I've made it actually part of the sales process. I will tell people, look, we shouldn't do business together. I just talked you out of doing business with me. Please remember that when you tell your friends and family to work with me, because they need to know that if I say they should do it, it's because it's the right thing for them. And there's no way to know that unless you've worked with someone who told you, hey, I refuse to do business with you because I don't think it's the right approach. So I took that thought last week and I thought, you know what? I don't believe I've been heard by this person that's very close to me. I don't believe I've been as direct as I need to be. So I immediately picked up the phone and I called them and I said, hey, can we talk for a couple minutes? And they said, yeah. And I said, look, I've told you over the last couple of weeks that I had some concerns, but I need to be very direct. I think you're making the wrong move. I think what you're doing is not going to accomplish your outcomes. And I think that you need to change tact. You need to change the direction that you're going, because I don't believe you're seeing the issues that you're going to be dealing with if you go down this road. And to my surprise, this person said, I really appreciate your help. As a matter of fact, I've got a lot of other things going on in my life right now, and I just wanted to do the path of least resistance. And this one seemed like it was easiest because I had already been connected with someone who told me this is a good way to go. And I said, well, I appreciate that, but I don't think it's the right way to go. And if you're looking for the path of least resistance, because you and I have a personal relationship, will you let me help you? Will you let me guide you through this and give you advice as a friend, as someone that we have a relationship with? And this person said yes. And then I realized I had an appointment with that person they were supposed to be meeting with to do the path I didn't agree with in about 45 minutes. So I cleared my calendar and I went and attended that meeting with that person and was able to ask the questions of the salesperson that they didn't know to ask. And all of my fears were found to be true. And I was able to guide them in a different direction. And my point here is be very, very, very willing to risk a relationship when you know that somebody is going down the wrong road. That does not make you a good friend by agreeing with them. It does not make you a good boss. It does not make you a good vendor. It does not make you anything good when it comes to a relationship if you agree with someone simply because you're afraid to risk the relationship. If it is a true relationship, it will withstand you standing up to that person and saying, hey, I'm very concerned about the decision that you're making, and it is your decision to make, but I don't think I've been clear enough and direct enough with you. And we as humans suffer from being direct. So I encourage you as a business owner, as an entrepreneur, as a salesperson, as a human on this earth, to seek confrontation. Seek out that person that you know you can help them, but that they're not getting through to you. You're not getting through to them. And really be willing to risk the relationship to focus on explaining to them why you think that what you are thinking is something that they need to be considering. Thank you so much for listening for the first half. Stay tuned. I'm going to start off in just a minute after this brief break and talk about 1031 exchanges and buying out of state and some things that I've learned recently that I want to share with you all. Hello, friends. I just want to interrupt our episode today really quickly to talk to you about our multi-unit property loan program. We can loan on up to 10 units of residential properties. And as a matter of fact, even commercial use of some of that space is allowed, as long as it's restaurants, retail, or office space, and that it is less than 49% or up to 49% of the space, and the rest of it is going to be residential units. We can lend with as little as 25% down payments, and we don't care about your income for anything other than the rental income from the property. These properties typically cash flow really, really well. So if you're looking to expand your portfolio, look beyond just 4-unit properties and get yourself to 5 or 8 or even 10 units through my multi-unit investment property program. Hey, everybody, welcome back to the second half of this week's podcast. Thank you so much for listening through the first half. I want to talk about 1031 exchanges and specifically about things that you can buy using a 1031 exchange. Now, I am not an investment advisor. I don't play one on TV. I'm not a real estate agent, but I'm helping a lot more clients and having a lot more conversations. And I want to share a lot of those experiences with you. Just 2 days ago, I had a conversation with a past client. And he called me up and said, John, I want to buy an investment property that a family member is selling. They don't want the house anymore. You and I have talked about buying investment properties. And so I want to buy this investment property. And I immediately stopped and I said, why? He said, what do you mean why? Because we want to own investment property. I said, no, but why this property? Are you buying this property because it's easy or because it's right? And he paused for a second. He goes, I guess because it's easy. I said, are you getting a deal on it? Like the family member is selling you the property. Are they giving you a deal? Yeah, I'm probably getting it for 15 or 20 grand below market value. I said, okay, so you're getting a deal, but let's run through the numbers. And now this property is here in Northern California. And I said, one of the things that you have to be aware of is your coastal states, the West Coast and the East Coast in general, you're not buying for cash flow. You're buying for appreciation. You're going to see long-term more appreciation in these markets. The rental income compared to the purchase price is skewed. Okay. I have another client who has a rental property. The property is worth about $550,000 and they get about $2,800 a month in rental income for a property here in Northern California. And I ran the numbers with this client. He's buying it for less than that. He'd probably pick it up for about $440,000. And he said it'll rent for about $2,200. And so I ran the numbers. They're going to put 20% down. Rate's going to be in the mid sevens. And I said, you're looking at being about $750 negative once we add for taxes and insurance. And that's not even counting property management. So are you buying this like you would think about a 401k? Are you buying this as a long-term investment that you're willing to put money into every single month like you do your 401k? Or are you buying it to produce cash flow today? And they said, I'm buying it to produce cash flow today. Like we're in our around 50 years old. We want to own a property that's going to generate income for us into the future. We're not buying it for long-term appreciation. We're buying it for cash flow. And appreciation will be nice. And I said, well, you're doing the exact opposite buying this property here. And the challenge is you're doing it because it's easy, it's in front of you. And that's the mistake a lot of us make, is doing what's easy and what's in front of us. And so I started to explain some alternative options. Now I've got some clients buying in some different regions in the United States. I've got some buying in Mississippi, Tennessee, Arkansas, Texas. And what we're seeing is a lot better cash flow in those states. We're seeing, I've got a client right now that has a property that is in Tennessee that they bought for around $250,000, and it's bringing in around $1,900 a month, $1,900 a month in rental income. Now, your property taxes are going to be pretty expensive there compared to California. You have to pay property management costs, which, depending upon what type of property manager you're getting, can be expensive. But when we looked at the math, we realized you're still creating significantly more cash flow because you can buy two of those for the one property that you buy in California. So now you have $3,800 a month in rent coming in. Even after you account for all the expenses, you're still making significantly more cash flow in those other states than what you're making in California, as the example. So you have to think about, what's my goal? Earlier in life, you're making good income. You don't need, as a matter of fact, you don't need cash flow today. You need to have an asset that's growing. You need the tax deduction. Then buy a property in a state that's going to appreciate faster, but not create as much cash flow. But if you're in a situation where you need that monthly cash flow, then by all means, you need to look at that and look at the equation and say, maybe owning in a coastal state isn't the right approach. And if you own a property now, that you said, hey, I've had this property for 20 years and it's working great for me. Well, that's true. But if you're in a place where you need to generate more cash flow, you can exchange that property. I had another client who exchanged a property in California and bought 4 properties between Arkansas and Tennessee. And it's really giving a lot more opportunity to create more cash flow because your price compared to rental income is more in line. For a lower price, you can generate a higher amount of rental income in some of these South and Midwestern states. You got to be careful about where you buy. You got to be careful about buying and being an absentee landlord. So there's a lot of things that you need to be aware of, and we'll talk through a lot more of that stuff in future podcasts. But I want to introduce the idea that, hey, you're not stuck with the cash flow numbers you're getting in your coastal states, and you should look in some other states. You also need to look for opportunities. You need to look at, if I could rewind back to 2010 and buy 7 homes in the Central Valley, California, I would have done it, because the market was down. It was down a lot. It was one of the biggest declining markets in the United States, but it turned around. It turned around, and those people who bought when everybody was afraid, those are people that made out like bandits. Guess what? We have housing that is going down significantly in certain regions. I just read a Wall Street Journal article this morning about the top 5 regions in the United States that are decreasing in home values, and 4 of them are in Florida. The 5th one is Austin, Texas. Those prices have dropped significantly, and the question is, are you willing to take the risk? I don't know where the bottom's going to be, but I know that at some point in time, we're going to rebound. And if you have a long-term strategy, you might be really well compensated in the long run if you're willing to buy in times when people are afraid. And when prices have dropped as much as they have, we've seen historically that over time they end up going back up. In 2010, everybody said prices will never get back to where they were. By 2015 and 2016, they were back to where they were. By 2020, they've gone significantly above. And I'm talking pre-COVID, they've gone significantly above. So there is opportunity right now. You just have to be willing to strike, and if you're willing to take the risk where everybody else is scared. Thanks for listening. If you like this, please share this with everybody that you know. If you have enjoyed my podcast, please leave a comment on whatever platform you're listening in. I really appreciate you. Really appreciate you listening. And please know that I'm interviewing to be your lender. So if at any point you have questions and you want to reach out, my contact information is in the description. And I'd love the opportunity to guide you through your home buying process. Thanks so much and have a wonderful day. Bye-bye.